It's May 3rd, 2014, current time, 10:15 GMT. Jay Mosley here with the week ahead Forex Trading Outlook. Any way you look at it, Friday was just another one of those bizarre science fiction days. If you were bullish on the dollar and bearish on bonds, you couldn't have asked for anything more with the headline U.S. jobs report. Yet, look what happened. We had that one initial reaction, and then the market started to eventually retrace, to gave back all or more of its gains in some cases. It actually gave back most of its gains, and we closed on, once again, an indecisive note. If you look at the euro dollar, for example, on the past 18 days, which is almost 4 months, it's closed with a 138 handle, except on April 21st when it closed slightly below 138. So really, on over those period, you've had two closes at 138.50, 5 closes above it, and 11 closes below it. But we've gone nowhere for the past month, and really nowhere for the past, since the start of the year, which is over 4 months. Low volatility is really starting to wear on people's nerves. I have a theory about it, which I'll explain later. There are all kinds of people trying to figure out why the market did what it did on Friday. Some said the jobs report was not as strong as the headlines showed, with weak average earnings, weekly earnings, and a low participation rate. Others say it was Ukraine boiling over, and that runs the risk on Monday when Japan will be closed, and also the UK. If it boils over the weekend, maybe we see a gap on a run for a flight to safety. But it seems like the bond market is leading right now, and that's what you have to watch for a guide. It's confounding, but that's the way it is. If you look in the week ahead, and I'm going to do that before I discuss the charts, there are 3 key events. They are Yellen's testimony to the Joint Economic Committee on Wednesday, expected to stick to her, the Fed's party line right now, which is there's no tapering, but there's no rush to raise rates. Then we have the Bank of England meeting on Thursday, but more important, probably the ECB meeting on Thursday. And regarding the ECB meeting, the surprise would be if the ECB does anything. Some people feel that June is a more likely time, as they're going to get revised inflation and growth estimates. So they will have to have the cover of a medium-term outlook if they want to make a change. So that's what we have on Thursday. You expect Draghi to be dovish, and we'll cover that as the meeting comes in. But so far, it's only words and no action. In the old days, it used to be that if the central banks held out something like the ECB is saying now, if the euro gets too strong, we're gonna react. The market would push the euro up and force the central bank into action. So far, the market does not have the firepower, as I showed you on the closing rates. So if we look at the charts, everybody's looking for a trend change in this market, at least a trend. I would look at the 200-day moving average. It's held since really back here in mid-July of 2013. We've been above it. We were below it really for a couple of days in early September of 2013, but essentially it's still sloping up, and I guess providing some underlying support. If that goes at one point, then that would give you a signal for a medium-term trend change, or a trend at least. So keep that in mind, put it on your blotter, but right now it's not a risk. If you look now at the 4-hour, and actually the 1 hour also, the daily shows same thing. We have lower tops, 139.67, 139.05, and last week's high 138.89. On the downside, we have 137.70, and really 130 last week's low around 130. 870, 770, and 137 now, probably around 10 or so. Boy, it's early in the morning here. 138.10. But key levels, and I'll just run back to the daily for a quick one. I'm sorry for jumble, but it's early in the morning here. Really, the key is 136.70 on the downside, which I've been pointing, and 139.67 on the upside, which is basically 136.70, 139.70. Higher support now at last week's low around 137.70, as the range tends to narrow. But that's it. The market's going to treat it as a range unless you see it closes outside of 138 to 139. If I look at the 1 hour chart, look at this. We get these gaps, not gaps, these brief spikes down, brief spikes up, brief spikes down, spikes up. This is not a market that's doing anything other than beating itself up. If you're a breakout trader, and warning those who are willing to stick their neck out and range trade. So I said Monday's a holiday. Key events are midweek, and then probably the ECB meeting. Otherwise, you could pick more of the chop. Keep an eye on U.S. bonds. Keep an eye on Ukraine, but that seems to be becoming more of a factor. Now, one thing, I have a theory on why the dollar has been weak. You'll see this article here. You see I post these links in my videos. You just click on them. This one is China behind the weaker dollar. I think you'll find that really interesting, and it pays to follow through on this link and then click through to read the article. So it's right here. Go ahead. Good luck. Good trading. We'll talk again on Monday. But right now, expect Monday to be a slow start with Japan closed. There is a risk of a gap if there are stops to run and Ukraine boils over. But that was also the situation last week. Once again, click on this link. I think you'll find it interesting.